good evening everyone. I hope you're all well this evening. Welcome to this evening's Advanced Synoptic revision session. Can I just check that you can all hear me before we get started tonight? I can see there's a thumbs up from Amy. Thank you. Thanks, that's brilliant. Nice to see a load of familiar names as well tonight in the chat box. Okay, so this first session, we're going to be looking at both task 1 and task 2 of the assessment. So I'm just going to share the task on the screen with you now. So task 1, you can see that it's worth 15 marks. Says Andrew, yes, it is being recorded. Is this one, Alison? Yes. Okay. Andrew has just started working at the accountants where you work and has asked you a few questions about ethics. And it says to please complete the questions below. And you can see that for all the questions that we've got to answer for this particular task, we've got a pick list. So the first one, it says, who should money laundering be reported to within a firm? So looking at the pick list, who would we report money laundering to within a firm? Excellent. Good. Brilliant. Yeah, brilliant. Lots of right answers there in the chat box. Brilliant. Yeah, so the money laundering reporting officer. Sorry, writing a bit wobbly. No, we've just started. That's absolutely fine. So the money laundering reporting officer. And then part B, it says, which external body should money laundering be reported to? So we've looked at who we should report it to internally. Externally, yes, brilliant. The National Crime Agency, good. Well remembered. The NCA, excellent. Okay, so part C. What are the two causes of legal action a client can bring against their accountant? We can see we've got two answers that we need here. So what two causes of legal action a client can bring against their accountant? Excellent, yeah. And not damages for this one, yeah. Good, yeah. So when it's a client against their accountant, it will always be breach of contract and professional negligence. There it is, negligence. Contract negligence. And then part D, so state two potential actions a court can take against an AAT member being found guilty of fraud. Yeah, this is for level 3, the Advanced Synoptic unit. So state two potential actions a court can take against an AAT member. So we've got fine and imprisonment. Excellent. Yes. Yeah, so this one, so we've got the pick list. I don't think failure to disclose is on there. This one. And a fine. and a fine. And then part E, what is the course of action a court can take against an AAT member being found liable for negligence? Good. Yeah. Damages. Brilliant. So loads of right answers. Damages. Good. Okay, part F. A client asks their accountant to produce their accounts and then audit them. State what safeguard the accountant should put in place if, firstly, they can reduce the self-review threat to a suitably low level. So of course, you know, they've got an accountant is producing the accounts and then they're auditing them. So there's a self-review threat here. So they need to put some kind of safeguard in place in order to reduce that threat. Yeah. Yeah, so we've got separate teams, different teams, ask another staff member to do the audit. Yeah. Yes, I think, Carol, that might be the second part of the question. Yeah, brilliant. Yeah, so the first thing that they can do is to have separate teams. And that would help to reduce that threat. And then secondly, if they cannot reduce the self-review threat to a suitably low level, yes, they would need to resign from working for the client. Good. If an accountant is worried they may breach a fundamental ethical principle, state 3 sources they are allowed to contact for advice. So if an accountant thinks that they may breach an ethical principle, who can they contact? Yeah, brilliant. Yeah, so we've got the AAT Ethical Helpline. Yeah, what else could we have? Whoop. Yeah, you could have a solicitor. Yeah, it could be, it would be an appropriate professional body. Yeah. So I'll put AAT helpline / yeah, an appropriate professional body. Yeah. Sorry, I'll scroll back up. Yeah, so sorry, I didn't come back up to the top. Separate teams, resign from the client. We've got an appropriate professional body, got a solicitor, and then, yeah, they've got an employer's helpline. Yeah, good. Yeah, so under the an appropriate professional body, that could be, in our case, it could be contacting AAT's ethical helpline. And then the other one was the employer's helpline. Okay, and the next one, you discover your client has various errors in their tax affairs which they are refusing to disclose to HMRC. What would be the suitable course of action? Yeah, so if they've got various errors and then they're refusing to disclose them to HMRC, what you'd need to do first, yeah, not in the first instance, you would need to stop working for them. You'd need to resign from working for them. So it would once again be the resign from working for them. Remember, ASAR is what you would complete when you report a client to the National Crimes Agency. Yeah, it can be. So resign from the client. In the first instance, you wouldn't report them. The first step would be to stop working for them. Okay, so if you forewarn your clients that you are going to report them to the National Crimes Agency, you may also be committing a crime. The crime is known as, so if you warn a client that you're going to report them, what is a crime known as? Yes, tipping off. Good. Yeah, and we have that up here. Good. And then when reporting a suspicion of money laundering, what is the name of the document that is used? Yeah, this is the SAR. Good. Yeah, the Suspicious Activity Report. Excellent. Good. Okay, so moving on to task 2 now. So we can see that this one's worth 12 marks. This task is based on the workplace of AGN and Co, the firm of accountants where you work. Yes, Rachel, you can. Yeah, not all of them were used, but we could, that one from resign from client, we needed to use that twice. Okay. You've been asked by your manager to help with the preparation of the year-end adjustments for one of your clients. Their year end is the 31st of March 2016. So year end of March 2016. You've been asked by your manager to help with the preparation of the year-end adjustments for one of your clients. So again, you've identified a few items in the inventory in the table below. And then we need to give the total value of the various items. So we can see we've got 3 different products here. Now, can anyone remember, so this is under IAS 2 on how we can value inventory. So can you remember, how can we value inventory? Yeah, the lower of cost, or what else? Lower of cost or net realizable value. Good, yes. So lower of cost or net realizable value. Good. Well remembered. Okay, so product 1 what will we value those units at? Yeah, because the net realisable value is lower than the cost. Good. What about the second product then? Yeah, good. And then the last product, the net realisable value. Good. So now we've got to calculate the total value of the items. So first of all, we've got product AA1. Sorry, I don't have much space on my screen. I'll squeeze it in here. So for product 1, we've got 14,000 units, and we're valuing them at the net realisable value. So times £8.16. So what will we value them as? Excellent. Yeah. Oops. Yeah, and then product 2. So we've got 8,725 units. Good. Times £14.50. So this time we're doing it by the cost because the cost was lower. Excellent. Yes. Good. So £12,512.50. And then product 3. So 3,650 units times £2.84. Excellent. Yeah, 10,366. Apologies, that's not very clear. So therefore, what is the total value then that we're going to value this at? Yes, brilliant. Excellent. Okay, so the next part. So it says they purchased a machine for £15,000 during the year. The transportation costs were £1,500. Installation costs were £750. The machine broke down at the end of the first month in use and cost £400 to repair. The client depreciates machinery 10% each year on cost, assuming no residual value. They charge a full year's depreciation in the year of purchase, none in the year of sale. What is the net book value of the machine after 1 year? So thinking about net book value, how do we calculate that? So without looking at the figures in the question at the moment, just in general, how do we calculate net book value? Yeah, good, Ben. Yeah, so yeah, good. What kind of depreciation though? It is, you're right, it's cost less depreciation. Accumulated depreciation, yeah. Amy, don't worry, I'll come back to it with you at the end of the session if you like. We'll come back to that one, yeah. Yeah, so net book equals cost minus accumulated depreciation. So first of all, we need to find out the machine. So we're told that they purchased the machine for £15,000 during the year. So we've got the cost of £15,000. Then there's going to be additional costs in which we can capitalise as part of that purchase price. Yeah. So then we've got transportation costs, which were £1,500. Yes, you're right. We can. Yeah, brilliant. So transportation costs can be capitalised. Good. £1,500. Whoops. Yes. Installation costs can also be capitalised. Yeah, but not repairs. Good, because repairs would be seen as an expense. Excellent. Yep, so we've got installation costs of £750. So therefore, what is the total cost of purchasing this machine then? Good, Connor. Yes. Good, Amy. Yeah. So £17,250. So that is our cost part of the formula. Now we need to deduct the accumulated depreciation. Good, Zoe. Yeah, good. So it says the client depreciates machinery at 10% each year on cost. So therefore, yes. So it has to be 10%. So the depreciation is £1,725, which leaves us with a net book value. Yeah, £15,525. Brilliant. Good. So it's C. Yeah. Yeah. Net book value exactly the same as carrying amount. Then it says another machine was purchased on the 1st of October 2011 for £52,000. On the 1st of March 2016, the machine was sold for £35,000. They're using a 10% on cost basis for depreciation, and it charges a full year's depreciation in the year of purchase and none in the year of sale. So when it comes to the this type of question, so we're trying to find out the profit or loss on disposal of the machine. And there's a couple of ways in which you can do it, but probably the easiest way is to think about it in terms of the actual disposals account. So if I draw out a disposals account, so what will we have on the debit side of a disposals account? Yes, yeah, the original cost of the machine. Yeah, so the machine cost us £52,000. Yeah. So the cost, the original cost of the asset would be entered onto the debit side of the account. Remember, we would credit the non-current asset account with the £52,000 in order to remove it from the account and then put it as a debit into the disposals account. Okay, so what would we enter onto the credit side of the disposals account? The accumulated depreciation, yes. So we need to calculate the accumulated depreciation here. So remember, they purchased the machine. Excellent. On the 1st of October 2011. The depreciation is 10% on cost. And they sell the machine on 2016. So first of all, we need to find out what is 1 year's worth of depreciation. Yeah. Yes, it's just the 52,000 times 10% equals 5,200. Good. Yeah, brilliant. Yes, so it's owned for 4 years, so times by 4. Yeah, so accumulated depreciation equals 20,800. Good. So remember, that is our accumulated depreciation. Now, what else will we enter into the credit side? Yeah, the sale proceeds that were received on the sale of the asset. So what was the amount then for the sale proceeds in the question? Good, the 35,000. Yeah. And then we need to just balance off the account. So what's going to be the total on both sides of the account? Good, yeah. I'll come back to that in a minute, Ben. Yes, good, Connor. Yeah. Yeah, so on both sides, the total is 55,800. So the carried down amount, which it will be the balancing figure on the debit side of 3,800. So is that a profit or a loss? I can see Connor's already put something in there. What does everyone else think? Yes, good. Yeah, they've made a profit. Profit of £3,800. So therefore it's option D. A few of you have got a bit of a question about the years. So we'll just go back and have a little look at that. Yeah, so then it would be shown as an income. That's right. Yeah. Yeah, so if it's on the debit side of the disposals account, then it would be brought down into the statement of profit and loss as a credit. So it would be an income or a profit that we've made, a gain on the disposal. If it's on the credit side, it would be transferred over to the statement of profit and loss on the debit side, so it'd be an expense. Yeah, so just watch with this one when you count in the years. So we purchased it on the 1st of October 2011. We sell it in 2016. So we owned it for the whole of 2011. So 2011 to 2012, 2012 to 2013, to 2014, to 2015 and 2016. You're right, it is 5 years, but it's saying that we charge a full year's depreciation in the year of purchase, none in the year of sale. That's why we don't do it in that 5th year. Rachel, we know it's straight line depreciation because it's saying 10% on cost. So it's on the original cost rather than, remember, when it's reducing balance, it's on the net book value. Okay. Okay, so part B, you've also been asked to provide some assistance to another one of your clients in relation to accounting for non-current assets. Sorry, I can see a few more questions. So, Alison, do we naturally assume the year is the 1st of the 1st, or do we go by the front? Yeah, so we're told, it's just one full year. So they've owned it in October. Sorry, they've bought it in October. Yeah, so 2011 will be one full year, because we're not, sometimes in a question it'll generally either say a full year's depreciation in the year of purchase and none in the year of sale, or you'll need to apportion it by the number of months in which you've owned the asset. But it doesn't say in this one. Okay, Zena, if you want, if you hold back at the end of the session, we can go over those years again if you like. Yeah, so the year end is 31st of March. So it's based on that whole 2011. We're not apportioning it. Okay, so the next bit, you've also been asked to provide some assistance to another one of your clients in relation to accounting for non-current assets. You are working on the accounting records for the client who is not VAT registered for the year ending 30th of June 2016. So this time we're told the year end is the end of June. You're right, it is 5 years in that previous question, but there's no depreciation in the year of disposal. So we only depreciate it for 4 years. So on the 1st of October 2015, the business purchased a new computer, paying $3,500, including VAT and a trade discount. The computer has an estimated residual value of £200 after 3 years. The business's depreciation policy for computer equipment is 25% reducing balance method. A full year of depreciation is charged in the year of acquisition, none in the year of disposal. The business is not VAT registered. So we need to show the double entry, firstly, the acquisition of the new computer. So how much did we pay for that new computer? £3,500, yes. Now it says it's including VAT. But the business is not VAT registered. So do we need to do anything here with the VAT? Excellent, yeah. No, we don't need to remove it because they're not VAT registered. They can include it as part of the purchase price. You're right, brilliant. So what is the double entry then for that 3,500 for the new purchase? What account will we debit and which account will we credit? Yeah, so we need to debit the asset account, good, and credit the bank account, good. So debit the non-current asset account, so it was computer equipment. And then we would credit the cash at bank. So we're increasing the assets, decreasing the asset of cash in the bank. Good. Excellent, Alison. Good. I can see you've already entered the answered the next one. Brilliant. So the second part, the depreciation charge for the year ending 30th of June 2016. And for this, again, we're going to do the double entry, but just be careful with this question, because if you read here, it says that see the T accounts below for opening balances. So in this part, we need to bear in mind the balance brought down that we're given on the computer equipment at cost account and the balance brought down on the accumulated depreciation account. So Alison's totally right. The double entry would be, yeah, good, Anthony. You would, yeah, you debit the depreciation charge account to increase the expense. And then we would credit accumulated depreciation. Yeah. So we'll enter them accounts in first, and then we've got to calculate the amounts. So Rachel, it's just till the end of task 2 this evening. So normally they're around 30 to 45 minutes, depending on how long the tasks take. Okay. If you're ever unsure, and when you get into the exam and you think, oh, I just can't remember which way around the double entry goes, if you think to yourself the C in accumulated for credit, that might help you to remember that accumulated depreciation with credit, and then we need to debit the depreciation expense. So now the next stage is, we know what accounts we're debiting and crediting, but we need to calculate the actual amount. So we're told, remember, we're told the computer has a residual value of £200. We're told that the business depreciates computer equipment using 25% reducing balance. What do we need to do here with this? Anyone have any ideas what we need to do first? Yeah, so we need to find out that depreciation charge. Yeah, that's it. But be careful with that, because the residual value, it's in there for a reason. So remember, it's reducing balance method. So therefore, we don't deduct the residual value. We only deduct it when calculating straight line depreciation. When it's reducing balance method, you just need to ignore that. Yeah. So remember, when we calculate using reducing balance method, it is just the net book value times the percentage. Yeah, it's not really a trick question, but the residual value is in there, and the examiner's just testing that you know not to deduct it. Yeah. So the depreciation is going to be the net book value times 25%. So can you remember? Good, Alison. So, but first of all, we need to bear in mind these other balance brought downs, remember. So to get to the net book value, how do we calculate that? We did look at this a little bit higher up. What's the formula to calculate the net book value, or the carrying amount of an asset? Cost less accumulated depreciation. Yes. So the first point is to find out the cost. Now we need to bear in mind, yes, Carol, you've got it. We need to bear in mind the balance that's already on the computer equipment at cost account. Yes. So it's 18,300. Plus, what do we need? Yes, plus the 3,500, the new purchase. Good. And that will give us a cost of 21,800. So that's our cost. Now we need to deduct the accumulated depreciation. So we need to look at the accumulated depreciation account, and we can see that there's a balance brought down on the account of £3,140. So from this 21,800, we need to deduct this amount, the £3,140. Remember, that is coming from the balance brought down on the accumulated depreciation account. So then what else do we need to do? So if we deduct that, so 21,800 minus 3,140, we have 18,660 pounds. Yes. Yeah, but we've got to times it by 25%. Brilliant. Brilliant. Yeah, so we need to allow for that depreciation. Brilliant. So times 25%. Oops. Good, Carol. Yeah. So equals £4,665. Yeah. So that is the depreciation expense. So Jemana, the 18,660 is the 21,800 minus the accumulated depreciation from the accumulated depreciation account. And then we need to record these into the actual T accounts now. Okay. So it says record the opening balances and the transactions in the T accounts below. On each account, show clearly the balance carried down or transferred to the statement of profit or loss. So careful with this one, because it wants you to transfer over to the statement of profit and loss. Remember the type of accounts that are included in the profit and loss: income and expense accounts. So we've got our balance brought down of 18,300. What else do we need to enter into this account? Yes, the 3,500 for the new purchase. Yep. So on this account, would we enter a balance carried down, or would we transfer it over to the profit and loss? A carry down, yes. Yeah, because remember this is an asset account, so it will go to the statement of financial position. Good. Okay, then we've got the computer equipment accumulated depreciation. We've got a balance brought down 3,140. What else do we need to enter in here? Yeah, so this is just the depreciation expense. And remember, when you come to write the details or the narrative within the account, it's always the account that holds the opposite side of the double entry. So on this account, will we enter again a balance carry down, or will it be transferred to the statement of profit and loss? Yes, because this is a liability account. So again, it's going to go into the statement of financial position. So it would be a balance carried down. And then depreciation charge. So what side of the account are we going to post to? Will it be a debit or a credit? Yes, a debit, because we need to increase it. Good. what was it, £4,665. And remember, the account that holds the opposite side of the transaction, so the credit side of the transaction, was the accumulated depreciation account. Yes. So on this one, will we enter balance carry down, or will it be transferred to the statement of profit and loss? Yes. Yeah, so depreciation charge, it is an expense account, so it will be included in the statement of profit and loss. Good. Excellent. Jemima, we can come back to that bit after. Okay. So thank you very much for attending this evening's Advanced Synoptic revision session. If you have any questions, please feel free to contact us at aatrevision@fi.co.uk. You will receive a recording. Anyone who has any questions, wants me to go over anything that we've just done again within task 1 and 2, you can stay behind if you like, and I'll go through it with you. The rest of you, thank you very much for attending and all participating this evening, and I hope to see you all on Wednesday night. Thank you.